Good afternoon and thank you for joining us today. Welcome to our Combat Pension Scams webinar. It's great to see so many of you in attendance. We ran a similar event last year and I'm pleased to see both new and returning people in our virtual audience. Whether you joined us last year or are new today, you'll be aware of the terrible impact of scams and their increasing prevalence. We need to address this, deterring criminals from operating pension scams in the first place and alerting savers to the potential dangers. The pledge that we launched in November 2020 to help combat pension scams has been adopted by over 600 schemes and organisations. Despite this great news, we need to stay vigilant, wise to the increasingly sophisticated and devious methods of criminals. Pension scams are devastating. They destroy lives, robbing savers of the security and future they've spent a lifetime investing in. Pension pots, large and small, are being targeted with increasing sophistication. This is not merely the work of opportunistic individuals. This is organised, directed criminal activity. And as the situation evolves, we all need to continue our collective effort to spot, deter and stop scams, for the security of savers, to combat criminality and to maintain the reputation of our industry. Today we're going to be focusing on 4 areas. Information about the Pension Scams Action Group and the developments about working together. A more detailed look at TPR's enforcement of a high-level sophisticated scam that saw over £13 million of savers' pensions stolen. This is also featured in the BBC One show Defenders UK, which is aired today. You can watch this on BBC iPlayer and a link will be provided to you after the webinar. Updates from the Money and Pensions Service about victim support and their services, and an update from the Pension Scams Industry Group. As ever with our webinars, please don't worry about capturing all the information yourself. We will direct you to online resources with useful links, including an opportunity to feedback on the session itself. The survey is now available at the top of the menu to the left-hand side of the video player. Please fill this out before you leave, even if you can't stay with this until the end. You will also have an opportunity to submit your questions and comments to us as we go along. These will be answered in the Q&A session towards the end. Just click on the box below the video player, type your question and submit. So, to begin, I'd like to welcome Paul Sweeney, our newly appointed Pension Scams Action Group Business Lead, who's going to talk about its evolution from Project Bloom and the aims of bringing together industry and agency partners.
Thank you, Nicola, and hello everyone. Today I'm going to discuss the role, rebrand and the future direction of the Pension Scams Action Group, formerly known as Project Bloom. I will also discuss how this sits within the pension regulator's strategy to combat pension scams and the ongoing work we're doing to understand the continuing evolution of pension scams. As people struggle with the cost of living, they are increasingly vulnerable to the risk of being a victim of a scam. As more people look to utilise savings to cushion themselves in times of financial hardship, the opportunity for scammers to swoop in and steal from savers becomes greater. As a result, it's more important for regulators, law enforcement agencies and the pensions industry to come together with a unified and joint approach to safeguarding people's economic futures. The Pension Scams Action Group, PSAG, is a multi-agency task force now led by the pensions regulator, set up to do just this. The rebranding of Project Bloom, which was created over a decade ago, to the Pension Scams Action Group, reflects its contemporary ambitions with a name that more accurately demonstrates its purpose, provides a recognisable brand identity and unifies group partners. TPR's own strategy to combat pension scams and fraud is primarily through education, prevention and enforcement, 3 principles which are shared by the Action Group. The core members of the Action Group include Department for Work and Pensions, Financial Conduct Authority, the Treasury, Money and Pension Service, the National Economic Crime Centre, Pension Scams Industry Group and of course the Pensions Regulator. As core members, we share a commitment to achieve the group's strategic aims and we will continue to work together to achieve them. Recently, we undertook an intelligence gathering exercise to develop a joint threat assessment in order to understand more about the evolving pension scams landscape. This exercise benefited from a close working relationship with the National Fraud Intelligence Bureau and key input from action group partners in industry. It revealed a complex and sophisticated picture of the threat posed by pension scams. Some of the main findings were as follows. Following the cold calling ban, pensions liberation is in decline. However, these types of scams persist. Historical and present offending continues to be revealed through TPR investigations, one of which will be spoken about in more detail later in the webinar. Pension-related investment scams and models seen in other forms of investment frauds continue to rise, such as the use of website cloning and impersonations of existing brands to help facilitate fraud. Secondary scamming is also on the rise. This is where those who were already victims of a scam are given false offer to help them get their money back, leading to more devastation and deeper despair for victims. Issues such as transfers that result in high costs and charges continue to result in bad member outcomes and are still prevalent models for taking savers' money. Additionally, the use of remote communication, including use of social media, is witnessed across all offending. It allows offenders miles away from potential victims to seek them out, engaging them by assuming different personas, misrepresenting their qualifications, and impersonating legitimate brands. As changes in the regulatory space around transfers and consumer guidance start to affect how scammers operate, their tactics will continue to evolve. To ensure we as agencies and the industry can evolve to meet new challenges, we need to work together. TPR have dedicated a new resource, appointing a business lead for the Pension Scams Action Group to develop and test new approaches for potential joint working initiatives with partners. These will seek to meet the strategic goals, which are improving public awareness of pension scams through MoneyHelper, the FCA Scam Smart campaign and action fraud campaigns, primarily encouraging members to think before they transfer, check who they're dealing with and report scams. Understanding the problem by enhancing the intelligence picture to support and inform effective policy making, such as conducting threat assessments. Enforcement and regulatory interventions, sharing intelligence from the industry across agencies, leading to enforcement and disruption activity. Legislation and regulations, identifying what actions should be taken forward by government and other to prevent future pension scams. Non-regulatory interventions. This includes good practice that can reduce the likelihood of pension scams without the need for legislation, such as our own pledge to combat pension scams campaign. And finally, victim support. To minimise the impact scams has on victims, TPR have developed a referral mechanism so that those victims identified in our casework are triaged and can make use of the City of London Police victim support expertise. These are the goals we are looking to achieve over the next 3 years. We are developing plans with partners to meet those strategic goals. We will have more to communicate with the industry about them in the coming year. We are committed to protecting savers from pension scammers, but we need continued support from industry. It remains the case that scams are underreported, and so we continue to ask industry to report all suspicions of pension scams, including incidents or individuals of concern, as well as suspected and known scams. PSAC continues the work started under Project Bloom with our colleagues at City of London Police, Action Fraud and the National Economic Crime Centre by encouraging members of the public and the industry as a whole to report any concerns or suspicions of a scam to Action Fraud. This information, no matter how minor it may initially appear, could prove to be vital in combating a potential pension scam. Thank you. I'll now hand back to Nicola.
Thanks, Paul. A lot to think about there and a good example of the benefits of working together. Paul mentioned some enforcement work just now, and I'm pleased to introduce our next speaker, Anna Hendry from our enforcement team, who will discuss details of a particular case.
Thank you, Nicola. One of the core pillars of our plan to combat pension scams focuses on fighting fraud through the prevention, disruption and punishment of criminality. Today, we want to highlight some of the enforcement work that makes this possible. We will spotlight on a recent case that has seen custodial sentences handed down to the perpetrators and share insights on the impact this offending has on victims. Following the cold call ban, pension liberation is in decline. However, these types of scams persist. We're still uncovering and bringing proceedings against historic and present cases. It's likely that these types of cases will continue to be uncovered, as people often don't know they've been scammed until years later. Here I will give you a brief overview of a specific case that concerns a high-value pension liberation fraud, known publicly as TPR and Barrett, Dalton and Hanson. In 2020, I was the lead specialist assigned to manage the case through commencement of criminal proceedings, extradition and court action. Now I'll give you an overview of the case. Between 2012 and 2014, 245 members of legitimate occupational pension schemes were persuaded to transfer their pension savings, totalling £13.7 million, into 11 fraudulent schemes. Once transfers were complete, the pension savings were dissipated by the criminal enterprise and ultimately lost. David Austin was the ringleader. During 2012, he set up several companies, bank accounts and occupational pension schemes, including their sponsoring employers, to facilitate the pension liberation fraud. He oversaw all aspects of the operation, which took place in both Spain and the UK. An office in Spain operated as a call centre where potential victims were targeted through cold calls, internet inquiries and text messages. Leads were then followed up by a team of introducers offering things like a tax-free cash bonus and the prospect of higher investment returns to encourage members to transfer their pension savings into the scam schemes. Once members agreed, the transfer process was handed over to an office in London, set up with an office manager, pensions manager and administrators, all overseen by Austin. Two of the introducers were Alan Barrett and Susan Dalton, both British nationals living in Spain. They were actively involved in persuading many victims to transfer their pensions to scam schemes. However, their roles weren't just confined to introducing. They were also appointed as company directors of the sponsoring employers and trustees of the associated schemes. Where Barrett was the director of the sponsoring employer, Dalton would be the trustee to the pension scheme and vice versa. Their roles as trustee allowed them to facilitate the transfer of funds out of scheme bank accounts and into companies controlled by Austin. Between them, Barrett and Dalton allowed over £13.5 million to be transferred to Austin and his companies. They received in the region of £400,000 and £170,000 respectively for the roles they played in the scam. What did we do? In November 2014, we received a whistleblower report from the directors of a company that had links to Austin. They expressed significant concerns about Austin, his connection to Barrett and Dalton, and the companies and pension schemes they were associated with. The whistleblower report suggested an immediate risk to the assets of the schemes. So in 2014, without notice to the incumbent trustees, we appointed an independent trustee with exclusive powers. The independent trustee conducted their own investigation and quickly discovered that almost no scheme funds remained. On behalf of the independent trustee, TPR brought a restitution claim against several defendants, including Austin, Barrett and Dalton. This culminated in a trial at the High Court, with the judge delivering a ruling in 2018 that the defendants were to pay back the £13.7 million in misappropriated funds and recommending the case be considered for criminal proceedings. In August 2018, TPR prohibited Austin, Barrett and Dalton from acting as trustees, and following consultation with the Crown Prosecution Service, we proceeded with a criminal investigation. David Austin died in July 2019, so the investigation strategy was refined to focus more specifically on the actions of the trustees. In December 2020, against the backdrop of a global pandemic and a looming Brexit deadline, we sought to extradite Barrett and Dalton from Spain to face trial in the UK on charges of fraud by abuse of position. In January 2021, Dalton was arrested in the UK whilst attempting to return to Spain. Barrett was arrested in Spain a few weeks later and was returned to the UK by officers of the Metropolitan Police Service during March 2021. In April 2022, the criminal proceedings concluded with the sentencing of Barrett and Dalton, who both pleaded guilty and received terms of 5 years and 7 months and 4 years and 8 months in jail. Confiscation proceedings under the Proceeds of Crime Act are currently underway. TPR initially brought criminal proceedings against a third defendant, Julian Hanson, who pleaded not guilty to fraud. Following the guilty pleas of Barrett and Dalton, we decided to offer no evidence against him, as in our view it was not in the public interest to continue with the trial against Hanson alone. Now for some reflections on the case. It's worth remembering that this scam started 10 years ago and a lot has changed since then. First, as a regulator we've changed. We now have a dedicated enforcement team with the established capability to prosecute these complex criminal cases. As an enforcement team, we continue to make use of our powers to remove, suspend, prohibit and appoint trustees. This gives a more straightforward way to manage the immediate ongoing risk which scammers might pose. Where we identify risk, we take action to protect pension savings. Secondly, from November 2021, additional safeguards in the form of transfer regulations give trustees more power to prevent members from transferring into suspicious schemes. Trustees now need to carry out checks to determine if any risks are present through a red and amber flag system, which should help make these types of scams more challenging to potential perpetrators in the future. Investigating and prosecuting large-scale financial crimes like this can be extremely difficult, but it's important to remember that at the heart of these cases are ordinary people who have worked hard to save for their retirements, only to be stripped of their savings by the likes of Barrett and Dalton. The sentencing judge recognised the devastating impact of the offending on victims in this case when he said the following: "I have read 13 victims' personal statements. They each tell a similar story, which I'm sure is representative of all. People who have worked hard, saved for their future and have been robbed of their financial security. I heard about depression, anxiety, divorce and suicide attempts. Each account is a story of a life ruined, and you should be ashamed of bringing such misery to so many innocent people." Engaging the victims early and being clear on our obligations under the Victim Code allowed us to help them tell their story. It exposed how the scam operated, which will protect others from falling victim to similar scams. Hearing the stories of others helps take away some of the shame that people feel when they've been tricked, and it can act as a catalyst for others to come forward with reports of crimes or other information. Unfortunately, jail terms are not always enough to stop scammers from trying to steal pension savings. It will take the whole pensions industry to pull together to disrupt, deter and pursue those who are intent on getting their hands on people's hard-earned pension savings. Thank you for listening. I will now hand back to Nicola.
Thank you, Anna. That was really informative. A complex case made clearer, and at the heart of it, victims who have been devastated by the impact of scammers. As I mentioned earlier, you can watch more about this in the BBC One show Defenders UK, which aired this morning by watching the latest episode on BBC iPlayer. And next, let's take a more detailed look at victim support through MoneyHelper services. So may I introduce Charlotte Jackson, Head of Guidance Services and Consumer Protection Strategy from the Money and Pensions Service. Charlotte.
Thank you, Nicola. Today I'll be focusing on what PensionWise is and what recent data tells us about the delivery of the services, as well as our work supporting victims of financial scams and crimes. But first I'll introduce the Money and Pension Service, MAPS. MAPS is an arm's-length body sponsored by the Department for Work and Pensions, established at the beginning of 2019. We also work on policy matters relating to financial capability and debt advice. We provide a wellbeing strategy and have a statutory responsibility for consumer protection. Our consumer brand is called MoneyHelper. MoneyHelper aims to cut through the jargon and complexity of financial systems and explain what consumers need to do and how they can do it. We offer free, impartial help that's quick and easy to use online and over the phone. It's important to know that we don't give legal or regulated financial advice or recommend specific financial products because we aren't regulated or authorised by the Financial Conduct Authority to do so. MoneyHelper is helping people to clear their debts, reduce spending and make the most of their income, to support loved ones plan ahead for major purchases and find out about entitlements, to build up savings and pensions and get to know their options. We know pensions and investment loss has a devastating financial and emotional impact on people. MAPS has implemented a focus on consumer protection across all our channels and services to support people through their lifetime and if they become a victim of a scam. We also aim to provide early intelligence to government, regulatory partners and the industry on areas of concern. Information is vital to understanding how pension scams operate. As a function of our consumer protection work in the 2021, the Financial Crime and Scams Unit was created to pool our internal expertise. This has enabled us to take forward a number of initiatives, including direct reporting to action fraud. Through the FSCU, we see multiple issues being faced by consumers and how much pension scams and fraud have evolved. Most pension fraud crosses over into wider regulatory or financial areas. Of the concerns we take, only 14% seem to be confined purely to pensions, with 59% relating more broadly to investment and other scams. Cold calls still feature in 6% of the concerns we see, with an additional 5% relating to online adverts, social media or Google search. To support people who have become a victim of a pension scam, we offer pension loss appointment service appointments, showing the options available to them for redress and resources available to help. This can often be enough to enable some people to approach the relevant parties to claim recompense, but it's difficult for the average scam victim to know where to start. Many lack the confidence, skills, time and energy to pursue it. The trauma of lost savings and the shame and embarrassment can cause many to write it off. Pursuing redress takes persistence, stamina and courage. With the introduction of the transfer regulations in November 2021, MAPS launched the Pension Safeguarding Service. Its aim is to reduce the number of people transferring into high-risk, inappropriate or fraudulent schemes. When checks on transfers have identified an amber flag, this could mean that members are at risk of being scammed. This is where members are directed to a safeguarding guidance appointment with MoneyHelper. This appointment is independent, impartial, free to use and backed by the government. Providers will give members a web link to book the appointment and communicate that the member needs to book and complete the appointment themselves. During the appointment, individuals will be able to get help and guidance to identify if they are at risk of being scammed, get information on any additional checks that can be made to help them feel more confident about their decisions, and a summary of the dangers of pension scams. High-level data is collected during the appointment. It's dependent upon what the customer shares. It includes current pension arrangement, proposed transfer arrangement, introducers or financial advisors involved in the transfer process. The information shared by the customer will help the appointment be more tailored to the customer's circumstances. Some data is also shared with regulatory partners to help identify trends. Since the regs were introduced, we've seen a number of trends develop. Firstly, that the number of referrals is 50% higher than we were requested to deliver, with more than 10,500 appointments delivered between the 1st of December 2021 and the 31st of December 2022. Secondly, whilst providers are not required to give reasons why people are referred to us, we do ask and track what customers believe they are being sent to us about. The table on screen shows the reasons people believe they are being referred. A high percentage of people claim not to know why they have an appointment. Thirdly, many of the customers who are referred appeared to fall outside of the policy intent of the regulations. indicating that the amber flags are being applied inconsistently and there's a high level of risk aversion in their application. This is naturally causing not only high volumes of referrals, but increasing frustration and distrust by consumers. High numbers of referrals of customers would not ordinarily trigger providers and trustees to be concerned, maybe making us less effective at helping those that really need it, diverting resources away from those tackling those issues. Most importantly, we want to prevent scams from happening. We want to support consumers to get to know their pension options and to empower them with better knowledge. In June 2022, stronger nudge regulations were introduced. This makes it a legal requirement for trustees to offer to book their members a PensionWise appointment. PensionWise is a free service offering impartial guidance to people over the age of 50 about their defined contribution pension. Since Stronger Nudge started, customer satisfaction with the service has remained very high. We also see bookings by providers have a high success rate. Of those customers who have booked a PensionWise appointment by their provider, 60% complete that appointment. During an appointment, members get specialist pension guidance, which usually takes up to an hour and includes the options for taking pension money, how each option is tasked, other areas which may be relevant based on specific needs, such as death benefits, continuing to pay into a pension, or transferring a pension. Next steps to take questions to their provider. You can see more data about our pension guidance and the digital tool performance, which is available to view through our Money and Pensions website. We monitor changes in take-up of guidance services to improve our understanding of members and how they're interacting with their pensions. And these are just some of the ways that MAPS can assist you and your members and your employees. The current cost of living increases mean that many more people become vulnerable to a host of financial issues, including scams like loss of savings, debt and lower real-time earnings. In summary, for those of you who deal with members, what's most important is that they get the right guidance at the right time. We know that guidance is more impactful when members are already engaged and thinking about pensions. And this isn't just confined to PensionWise appointments, and we encourage everyone to familiarise themselves with our services and the support that we are able to give to members. Useful links, including data about pension guidance, will be included in the resources at the end of this session. Thank you for your time. I'll hand back to Nicola.
Thanks, Charlotte. We've heard a lot there about how victims can be supported and some takeaways about referring services. I'd like to take this opportunity before we go to our final speaker to remind you all to submit your questions or comments to our expert panel. These will be addressed in our final Q&A session at the end. And now, Margaret Snowden, OBE, Chair of the Pension Scams Industry Group. Margaret.
Thank you, Nicola, and thanks to TPR for inviting me to speak today. I want to share a few thoughts on protecting our members and also protecting ourselves from scammers. Firstly, scamming is endemic. Wherever there's a shortage of something that people want urgently, scammers are there to lure them in and cheat them. Desperation and urgency make people both vulnerable and careless, traits that are essential for scammers to succeed. The delay in people realising they've been scammed makes scamming attractive to criminals. So for that reason, our priority focus must be on preventing scams. We focus on pension scams for obvious reasons, but scammers use the same techniques elsewhere too. The cost of living crisis is a real opportunity for scammers, and we've already seen scams offering to help with fuel bills, devices to reduce power and fuel consumption, access to government grants and non-existent loans. The list seems endless. Elon Musk was even seen to give away bitcoins to randomly selected people. He may be a bit off the wall, but why on earth would he email you? We can be amused by some of the more inept efforts. Russian oligarchs offering to pay profits, for a small fee of course, into your bank account to avoid sanctions. But it's the clever ones we need to look out for. Fuel price increases and rising inflation is likely to affect pension saving, not just in people stopping paying contributions, but in people accessing their pensions early to get cash, or in transferring pensions to where they can get early access to cash. Bad news about pensions in the press makes scheme members more anxious. We need to look out for these things happening and get ahead of it. That means keeping tabs on sudden increases in early retirement. Insurers have a duty to vulnerable customers, and we should also recognise vulnerability in our members and act on it. We need to know our members better so we can spot unusual behaviour, like a huge increase in people cashing in pensions. This means having good data and keeping in touch. We should regularly warn members about scams and what they look like. We should be more interested and should explain processes and reasons at the outset of communications with members. Most importantly, if we think we see a scam, we should call it out and explain our concerns to members in words they understand. We should also report suspicions of pension scams to Action Fraud and relevant concerns to TPR and FCA. This closer relationship to members is more expensive to provide, but it beats scammers at their own game, as well as showing us to be the best guardians of retirement savings. It can avoid us having bigger costs in the future. Some of us might think it's not our job to save members from foolish decisions, but this line fails if our standoffishness is seen later as negligence, and even trying to show that we weren't negligent costs a lot in time and money. Most of us do our bit on scams prevention. Over the years, we've made it harder for scammers to operate successfully through carrying out due diligence on transfers and providing resources for the industry. Here's a reminder of some key resources. Firstly, the PSIG Code of Good Practice has been available since 2015. As a group and working with partners, we have updated this several times since. We also have the PSIF Intelligence Sharing Forum, which is open for membership to schemes, providers, administrators and others with knowledge of scams. And this helps us share what's happening now and to spot trends, to spot evolving tactics and suspicious operators. We're currently in the process of updating PSIG guidance, and this will be published soon, which will help us support the industry in navigating new responsibility and making assessments of risk. Good practice must be the norm because there's safety in numbers. We can define good practice by what the majority do, and the Pensions Ombudsman will take this standard into account in determinations. Also, please show that you care about good anti-scams practice by adopting the TPR Scams Pledge. It's like a neighbourhood watch scheme and alarm systems on your house. Scammers are like burglars. They'll not waste their time on the best protected schemes and members. We really are all in this together. And while it can be challenging, collecting information on suspected scams will help authorities to understand the scale of the problem and resource accordingly. And this can also help everyone running a scheme to see the need to protect against scams. Keep a record of transfers you're compelled to pay despite concerns about where they're going, and keep note of the number of transfers that are withdrawn when you raise concerns. Transfers you refuse and why, and transfers you refer to MoneyHelper and why. Please report suspected scams to Action Fraud or Police Scotland north of the border. If reports are not made, we'll never get resources to pursue scammers, and sadly, there's a lot of competition for police attention. Remembering the victims at the heart of pension scams and considering their treatment is vital. Where someone is scammed out of bank savings, there's often compensation from the bank unless the victim has been negligent. For pension scam victims, there's little hope of recovery. Where a pension scheme is defrauded, the Fraud Compensation Fund might make good the losses, but that's yet to be seen. Victims are on their own. In the pensions industry, we don't get to see firsthand what it's like for victims, as they're no longer our members, but perhaps we could think a bit about how we could support former members. Having information to hand about where they can get help would be a good start. Overall, I'm hopeful for the development of a one-stop shop for pension scam victims through MAPS, but we should be, at the very least, signposting victims to MAPS for support, as well as encouraging them to report to Action Fraud. It's all about good customer service and victim support. Thanks for listening, and I'll pass over to Nicola.
Many thanks, Margaret. Some useful information there. I would strongly encourage everyone to familiarise yourself with the PSIG Code of Good Practice and consider becoming a member of the Pension Scams Industry Forum. Before we move into our final Q&A session, we're going to take a short break to give you a couple of minutes to submit your questions or grab a quick refreshment. To submit a question, just click on the box under the video player, type your question and press submit. Thank you, Margaret. Welcome back, everyone. It looks like we have some questions queued up, so I'll get started. The first question is from Ivan. You have said that prosecuting cases like Barrett and Dalton is difficult. What would you say was the most challenging aspect of this case? Anna, that one's for you.
Thank you, Nicola. I'd say there were two big challenges in this case. Firstly, the international aspect. The fact that our two primary targets were living in Spain was undoubtedly the biggest challenge that we had to overcome. As a regulator, we don't have the ability to pursue extradition ourselves, so we couldn't return them to the UK to face criminal charges on our own. We therefore reached out to the Metropolitan Police Service's extradition unit to ask for their help. Just to put that challenge into a bit more context, this was December 2020. We were in the midst of a global pandemic and facing an imminent departure from the European Union, and there was a great deal of uncertainty around that time as to what would replace extradition once we left the EU. There were also the operational challenges presented by the pandemic, such as court backlogs and travel restrictions. To secure the first extradition for TPR was just the first step in the process of securing the convictions in this case. But to achieve it as quickly as we did in the circumstances that we faced was a real triumph, and it reflects the strong partnership we formed with officers from the extradition unit. I'd say the second challenge that we had to overcome in this case is one that will be common to many organisations that prosecute large-scale economic crime, and that's dealing with the often extensive amounts of digital material that can be gathered during the course of these investigations. In this case, for example, we had a company server that contained millions of electronic files, including email records. We had the information gathered by the independent trustee during the course of their investigation. We had information from other financial institutions and organisations, and we had the personal digital devices recovered from Austin following his death. In addition to that, we obtained a European investigation order to gather information from Spain, and we conducted witness and victim interviews, as well as several suspect interviews under caution. It takes a great deal of technical skill and expertise to gather and analyse the information in a case like this, and to put together a cohesive and strong evidential case, and to comply with our disclosure obligations. And it's a testament to the commitment and hard work of the case team that we delivered it in this case.
Thanks, Anna. That was really insightful. We've got a question in from Jane, also for you, Anna. You have described this as a criminal enterprise. What about the other people involved in it, and have they been prosecuted?
Well, thank you for that question. We take a risk-based approach to prosecution decisions, taking into account the available resource. Each case is considered on its particular facts, and prosecution is generally reserved for the most serious types of misconduct. In this case, and following the death of David Austin, we considered that prosecuting the trustees for fraud by abuse of position reflected the most serious aspects of the offending, fell squarely within our regulatory remit, and was achievable given the finite resources we have in the enforcement team. We did consider other potential targets during the course of our investigation, but because of the factors I've just outlined, we decided to take no further action against them.
Thanks for explaining the thinking there, Anna. Right, let's move on then to the next question, which is from Fiona. In what instances should we report scams, and what is significant enough to report? Paul?
Well, that's a very good question. The significance of suspicion is very hard to define, obviously. So if there's a situation where an individual or an organisation is finding themselves where they've got concerns around something, then they should at the first instance be reporting that and putting that into action fraud. We do have guidance. There is guidance on the Action Fraud website with how to report. We are aware that there are some challenges around that, and there has been some concerns, and it can seem quite daunting to put in the reports, but it's really, really vital that you do actually put those in and you ensure that any concerns that you do have, no matter how little they are, do come in. Likewise, you can report into the FCA. There is guidance on their website on what to do in case you have suspicion around an advisor. And TPR's own website also does have some guidance with regard to transfer regulations. So if you're working in due diligence, you see an amber flag or a red flag, there is some guidance there on what to do and how to report. But the most important thing, Nicola, really with reporting is that people actually do it. We know it's underreported. We're trying to encourage that more. We're working with partner agencies to try and ensure that the material that does get reported is reviewed and is used in analytical products so we can really understand the problem. So we're working very heavily with them. But what I would say is if you have any concern or suspicion, reach out to any one of those 3 websites, have a look, see what's available there, and put a report in, because without them we can't really push forward.
Thanks, Paul. It's clear it's important to report in. Next question then from Lisa. Trustees can't police what people do with cash once they have taken it from their pension scheme. So can anything really be done to stop people giving their money to scammers? Margaret, I'll come to you first on this one.
Thank you. I wish it was easy, but it's absolutely right. We can't stop people doing what they want to do with cash from their pension. If they want to blow it in the horses or a cruise, they're entirely free to do that. What we're a bit more concerned about is some unusual behaviour and people taking excessive amounts of cash. And there isn't anything that we can particularly do to stop them, but what is quite important is that we, as the pensions industry, make sure that people understand that scammers are out there and they're offering online, by telephone, opportunities to invest in things that turn out to be bogus. So we don't want people to fall for that, but regularly warning people about those risks helps avoid that problem without interfering with the freedom to take cash.
Yeah. Thanks, Margaret. Charlotte, what's your views?
I think the first thing to say is nobody wants to be a victim of a scam. Nobody sets out to lose their money, and most of us like to think that we're clever enough to spot them. I think that's our really big challenge around how do we make information to help support people make the right decisions and the right choices at the right time, and getting those guidance offers out there and making it the social norm to have those conversations will make a world of difference. That supportive environment, whether it be within the framework of the industry or organisations such as ours, I think will go a really long way to helping consumers going forward.
Yes, absolutely. Thank you, Charlotte. Okay, next question's coming from Sanjay. This one's for you, Paul. I've reported scam concerns previously to Action Fraud and I've never heard back. It seems like information goes into a black hole. Do you actually use the information that's reported? And when should I receive a response from Action Fraud?
Well, okay, so that's again a very good question, and we are aware of some of the issues that Action Fraud have. Obviously, we work with them. We are not Action Fraud, but we do work with them, and we look at every different aspect of the reporting journey with them. We are trying to get as much input as we can into that. What I would say with it is the information doesn't go into a black hole. It does go into their own reporting processes. They do disseminate that out. We are working with them to try and ensure that we receive that information. We do get regular updates from them on their reports that they see in relation to pension fraud and pension scams, and we're continuing to develop up opportunities there with them to kind of contribute that into understanding the wider problem, as I said earlier. So I understand that it can appear like it's a black hole and you may not get an instant response that you may want. There is an awful lot of fraud reporting that comes in. There's an awful lot of resource issues for them. But we are working with them, and we're working with other partners as well, with law enforcement agencies such as the National Economic Crime Centre, to just try and find better ways of understanding those threats and concerns that are being reported. But again, to go back to my earlier point, it's really important that people do report, and we do need that information.
Great. Thank you, Paul. Okay, next question has come in from Emma, and she's asked, have you received much feedback from your customers after their pension safeguarding appointments, Charlotte?
We have. Thanks for the question. I think it's safe to say that for most people entering into the service, it's typically not what they think it is. As I touched on earlier, nearly half of the people that come to us don't know why they're being referred. They maybe feel frustrated. There's a lot of angst about this is holding them up, taking transactions that they want to obviously proceed with. What we're finding is they'll come into it not really knowing what to expect, maybe being not entirely happy that they've been told they have to talk to us, but the feedback that we have is actually those conversations are really positive and personalised conversations around why it might be that there may be some concerns, and actually giving them the tools that they need to be going forward. So no judgment, no preconceived ideas around what they're doing, just again, as I say, a supportive conversation around why and how they keep their money safe, and what might be the concerns around it. So I think people are pleasantly surprised when they've gone through it, despite some of the kind of frictions around the service currently.
That's good to hear. Thank you, Charlotte. Okay, let's move on to the next question, which is coming from Hannah. Do you think that we are winning in the fight against scams, Margaret?
Well, I would like to say yes. That would be fantastic. In fact, I'd quite like to make myself redundant. But what I would say is we've come such a long way since the 2010s, because in the early days, people just didn't appreciate that there were such things as scams, and it was always thought it's affecting everybody else. It's not affecting us at all. So now we've got a change in that people are appreciating that there are such things. They still don't think it'll ever happen to them, but they appreciate that there are such things as scams. So are we winning? No. Have we made it difficult? Yes, I think we've made it pretty difficult for scammers, so much so that they're sort of gravitating towards easier targets, for example, investment, where they can get hold of people's cash. So not winning yet, but one day I hope to be able to say done.
Can't give up yet.
Not yet.
Okay, let's move on. Thank you, Margaret, to the next question. Next one's for you as well. Should all schemes use clean lists to speed up transfer processing?
I get asked that a lot because people think it must be a silver bullet. It must make it very easy to push transfers through, make them very slick, and to some extent, yes, it does. It's a terrific way to avoid doing the same due diligence repeatedly. So it is an efficiency, but what we have to bear in mind that to be able to keep it useful and to keep it safe, you have to keep it maintained, which means you have to keep it up to date. You have to keep checking that there hasn't been a change in, the organisations or the receiving schemes. So it's quite an endeavour. And some people have to employ people on a full-time basis to maintain it. So I would say for large schemes, for administrators, yes, it is a great efficiency measure. For small schemes, perhaps not quite so much. So there's a big outlay in managing a clean list, but it does have its place, and it ought to be used where it's sensible to use it. But one thing to bear in mind is even though you've got a clean list, you still have to make sure that the companies that are on that clean list aren't being cloned. So you can't just automatically say, well, it's XYZ, therefore automatically go there. You have to check the name is absolutely the same, and you have to check that the bank details are the same. So it's not a silver bullet, but it does save a lot of time.
Thanks, Margaret. Some really important advice in there, I think. Let's move on next to the next question. This one has come in from Paul Cowley. Is anything being done to address the resource issues for MoneyHelper, as members are unable to get an appointment for long periods, which is affecting the transfer values of DC schemes? And we've also seen members unable to get appointments within the statutory timescales for DB transfers. I'll come to you first, Charlotte, and then to Margaret.
Thank you. I think the first thing to say is this is a new service, so it'll be 18 months old in May, when there's supposed to be a review undertaken around how the legislation is working in practice. So none of us really knew exactly how this would land. As I touched on in the presentation, it's currently more than 50% higher than expected volumes, and that's quite challenging for a number of different reasons. So I think this time last year, at a similar event, we obviously made a commitment that because this is a statutory requirement, we would look at prioritising that. So internally, there's obviously a lot of work both being undertaken to look at how we put in additional resources to bring that down. And again, we're very much in the space of we want people who have been waiting longest to actually be the beneficiaries of any additional resource we come in. But secondly, looking at trying to understand why that's happening and what we can do about it. So what we have found is, as I mentioned, quite a lot of variation in terms of how schemes and trustees are approaching the regulation. And 4 months into the scheme, into this new service, we found those volumes really picking up, and actually talking directly to the providers where we are seeing very high numbers of referrals has been really beneficial. And I would kind of say to anybody unsure to reach out to us, because I think collectively where we've worked with schemes, we have reached a much better place in terms of the types of people that have been referring through. So that's the first thing, around making sure that the right people are accessing the service at the right time, but also looking at the mechanics of this as a process. So having people needing to access the service multiple times if they've got multiple pension pots that they're looking at consolidating. So taking the learning and kind of getting people and the industry to think, when is the right time for this person to be referred to take up the service, reduces the number of multiple appointments that individuals would otherwise be required to do. So there's some real basics in there around learning a little bit about how the industry is applying the regs, and also what the right level of resourcing is going to be long term. I think my plea would be for the industry to look at not leaving referrals to the service to the last minute before the guarantee periods, because obviously 2 weeks before the end of a guarantee period puts a lot of pressure, and that makes that quite difficult to manage longer term.
Yeah, great. Thank you, Charlotte. Margaret?
I agree. Excuse me, I agree with all of that. The other thing I would add is that, PSIG has put together some guidance which we're imminently publishing. I know we've been saying that for ages, but we genuinely are imminently publishing it. And the whole point of that is to try and put standardisation in, try and give some guidance on how to do this. We've been quite clear from the outset that only a minority of transfers are scams. And what we don't want to happen is lots of delay in the system where it's not stopping scams, it's protecting other people, from potential consequences. Now, we have to take that into account, but what we're trying to do is be practical and look at it from a risk-based view. So it's not perfect, but we actually hear the plea from MAPS, and we're doing what we can in terms of good practice for everyone.
Great, thank you. That's good to hear that, Margaret. Thanks very much. Okay, next question. This one has come in from Kirsty Cotton. It's also Margaret and Charlotte double act. Recognising that this is for DWP to take forward, are the panellists aware of any progress on reviewing the amber/red flags legislation? Margaret, do you want to come in on that one first?
It's a very good question, and I suppose it's one that probably most of us are asking. There is a commitment in the regulations to review after 18 months, so there has to be a review. I don't know what the review will say. We've input some ideas on what might be done, and I know that DWP has been speaking to various people in the industry about their thoughts on how this is working. So I'm hoping that in the not too distant future we'll have quite a clear answer that will actually help us all just make sure we're achieving what we want to achieve, which is protection from scams.
Yeah, absolutely. Charlotte.
I think it's quite difficult, isn't it? Because each of us only sees parts of the picture about this landscape and this particular problem. I think what I would say is it would be supremely useful where industry can say why people are being referred in terms of the amber flag to tell the customer, because we are collecting that data, and I think that type of information is really vital to understanding if this is hitting the objectives that we wanted it to do, and where it isn't, if we need to have a focus on those aspects. So there's quite an interesting breadth of reasons that we do see in terms of customers being referred to us in their words. I mean, obviously we don't know if it is the case that that's the reason why they've been referred to us, but I think all of those pieces of intelligence are really vital for making this work as effectively as it can do. And as Margaret said, there is a commitment to review the legislation that was built into it, and we're really keen to make sure that all of that learning goes into that discussion when that comes up.
If I could just add a small point that the guidance coming out from PSIG does actually recognise the difficulty that somebody comes cold to a MoneyHelper appointment, and we're trying to see, we're going to encourage the industry to actually tell the member what flag is there, which hopefully would help a little bit with maps. But we've also got to be careful that we don't give away too much information and then start, setting hairs running. But that's one thing that we are doing, is trying to help get the right information to the member and then on to maps.
Oh, that's really good to hear. Thank you. Thank you both. Okay, next question is coming from Kevin Davies. And this is going to be our penultimate question, so just one more after this. So Charlotte, this one's for you. You say trustees are being too risk averse with their referrals. Can you elaborate a little bit, please?
Yeah, it goes to the information that we're seeing coming through in terms of where the referrals are coming from within the industry. And again, we are seeing shifts as this service is bedding in and people are becoming more familiar with it. At the outset, there were some providers that were not going through their own due diligence process and actually referring all transfer requests through to us. So obviously in those types of situations, what we're seeing is actually the legislation was supposed to complement existing processes within the scheme, not replace them. And if a scheme sends all transfer requests through to us, then that obviously has quite significant implications on there. So from our part, we want to make sure that it's the right people benefiting from the service, and they are the ones that, the schemes and trustees will have always been worried about, I would hope. Just this gives them another tool in their arsenal about how to combat it.
Great, thank you, Charlotte. Okay, so sadly we're on to our final question, and this one is from Chris. It says, he's asked, if a provider wants to join PSIF, which I think is the Pension Scams Industry Forum, Margaret, how do they go about joining? And he's asking because he has, I have a client pension scheme that's interested. So Margaret, over to you.
Yeah, if you want to join, there are two ways to do it. One is to go onto the Pension Scams Industry Group website and click on the link, and you'll get a form to fill in. Alternatively, if you've got my number, just give me a call and I'll press that button for you. We're quite keen to have people involved in this because it's one way to really get a handle on what's happening, but also to share warnings informally around a forum. It's very useful. So yeah, we encourage as many people as possible to step up. At the moment, we've got more than 70 organisations, well over 100 people participating, but we've got room for more.
Great, good. Thank you very much. So, thank you panel for your participation today in today's webinar, and thank you audience for being so engaging and asking such thought-provoking questions. I'd like to close today's discussion by touching on the key messages that we've heard over the past hour. As scams continue to evolve and people's vulnerability to scams increases, particularly during economic hardship, it's more important than ever that regulators, agencies and industry take a united stance to tackle scams. Look out for more developments on education, prevention and enforcement of pension scams from the Pension Scams Action Group. Please report all of your suspicions of pension scams to Action Fraud and relevant concerns to regulators. As we've demonstrated, TPR will use its powers to prosecute perpetrators of pension scams who ruin lives. Remembering the victims at the heart of these devastating scams is vital. You've heard more about services to support victims and empower members throughout their lives. We ask everyone in the industry to familiarise yourself with these vital services offered by MoneyHelper. Make sure you can support members to find the right guidance at the right time. You can do even more by going beyond the legal minimum to protect your members by making the pledge to combat pension scams. Get practical support by using the PSIG Code of Good Practice and join the Pension Scams Industry Forum to share and learn more about what the industry is seeing now. We hope you found the webinar useful and you'll be able to download the slides from the Resources tab in the Delegate area, and the webinar recording will be available to watch again in a few days' time by navigating back to this page. As well as the slides, you will also be able to download our useful links document, which details all the important information we have discussed today. This will be made available as a standalone document in the Resources tab, which is on the menu to the left for easy access. And as always, we'd love to hear your views on the webinar, so please fill out our survey by navigating to the top of the menu to the left-hand side of the video player. Thank you to all our speakers today and to all of you for joining. Goodbye.